As of this moment, Bitfarms Ltd is trading at 5.86 Canadian dollars, experiencing a minor intraday dip of 0.0100, which translates to a 0.17% decline for the day. Now, the immediate reaction for most investors, particularly those new to online investing, is to glance at the Bitcoin price chart and assume this tiny movement is just noise, a simple echo of the cryptocurrency's own daily fluctuations. The common belief is that Bitfarms is a straightforward levered play on Bitcoin. If Bitcoin goes up, Bitfarms goes up more. If Bitcoin goes down, Bitfarms falls harder. And while there's a kernel of truth to that, focusing solely on that correlation today means you are missing the far more compelling, high-stakes corporate drama that is the real driver behind this stock's value and its future. The reality is that the story of Bitfarms right now is less about digital gold and more about a corporate Game of Thrones, a hostile takeover attempt that could fundamentally reshape the company or leave it fighting for its independence. Many traders using accessible platforms like the Robinhood app or SoFi Invest are likely just tracking this as a proxy for the crypto market. They buy a few shares hoping to ride the next big wave in Bitcoin, much like they might trade Tesla stock for its volatility or Apple stock for its stability. It's a simple, understandable strategy for self-investing. But the more seasoned capital, the kind managed through Fidelity wealth management or executed on professional-grade systems like Interactive Brokers, is watching a completely different set of metrics. They are scrutinizing Bitfarms' operational reports, their exahash per second growth, their energy costs in Argentina and Paraguay, and, most critically, every single SEC filing related to Riot Platforms' unsolicited bid to acquire the company. What's happening isn't just a market trend, it's a battle for control. Riot Platforms, a much larger competitor in the Bitcoin mining space, has been openly acquiring Bitfarms shares on the open market and has made its intentions clear. It wants to buy the company. Bitfarms management has responded defensively, enacting a poison pill strategy, technically known as a shareholder rights plan, designed to make a hostile takeover prohibitively expensive and dilute the ownership stake of any unwanted suitor who acquires more than a 15% stake. This corporate maneuvering is the central tension point that every current and potential shareholder must understand. The stock's daily movement isn't just about sentiment around Bitcoin. It's about arbitrage traders placing bets on whether the acquisition will go through and at what premium. Looking at the recent trading activity, the volume has been significant. Days with heavy volume have often coincided with new announcements from either Bitfarms or Riot. When Riot publicly criticized Bitfarms' board, the stock saw a surge in activity. When Bitfarms announced an expansion of its fleet or an impressive monthly production number, the stock reacted in kind. This back and forth creates a volatile environment. An investor simply looking at the chart might be confused by these sharp, seemingly random spikes and drops. But when you overlay the timeline of the takeover news, the price action begins to make perfect sense. It's a tug of war between those who believe in the standalone value and growth strategy of Bitfarms and those who believe the company's best outcome is to be absorbed by a larger, more powerful entity like Riot. Institutional investors who might use a variety of investing sites and hold positions in their individual brokerage accounts at places like Fidelity are analyzing the probabilities. They're calculating the potential payout if the deal is finalized versus the downside risk if Riot walks away and the acquisition premium evaporates from the stock price, leaving it to trade solely on its fundamentals again. The current stability, like the minor dip we see today, can be seen as a market holding its breath, waiting for the next move from either company's board of directors. So what does Bitfarms actually do? For anyone new to this part of the market, beyond the popular names like Nvidia stock that powers the AI world, Bitfarms operates in the digital infrastructure space. It is a vertically integrated Bitcoin mining company. In simple terms, they run massive data centers, often called farms, filled with thousands of highly specialized computers known as ASICs. These computers run 24/7, consuming vast amounts of electricity to solve complex mathematical problems. For successfully solving these problems and adding a new block to the Bitcoin blockchain, they are rewarded with a certain amount of new Bitcoin. This is their primary revenue source. The company's business model is therefore a direct play on the profitability of this process. Their success hinges on three key factors: the price of Bitcoin, the cost of their electricity, and the efficiency of their mining hardware. This is why the company has strategically expanded to locations like Quebec, Canada, and Paraguay, which offer access to cheap and often renewable hydroelectric power. Their most recent reports, before this takeover saga began in earnest, showed a company focused on aggressive expansion and fleet upgrades, preparing for a post-halving environment where mining rewards are cut in half, making operational efficiency the single most important factor for survival and profitability. They were positioning themselves as a lean, efficient operator capable of thriving when mining difficulty is high and rewards are lower. This standalone strategy is what the current management team is fighting for. So, what does Bitfarms actually do? For anyone new to this part of the market, beyond the popular names like Nvidia stock that powers the AI world, Bitfarms operates in the digital infrastructure space. It is a vertically integrated Bitcoin mining company. In simple terms, they run massive data centers, often called farms, filled with thousands of highly specialized computers known as ASICs. These computers run 24/7, consuming vast amounts of electricity to solve complex mathematical problems. For successfully solving these problems and adding a new block to the Bitcoin blockchain, they are rewarded with a certain amount of new Bitcoin. This is their primary revenue source. The company's business model is therefore a direct play on the profitability of this process. Her success hinges on three key factors: the price of Bitcoin, the cost of her electricity, and the efficiency of her mining hardware. This is why the company has strategically expanded to locations like Quebec, Canada, and Paraguay, which offer access to cheap and often renewable hydroelectric power. Their most recent reports, before this takeover saga began in earnest, showed a company focused on aggressive expansion and fleet upgrades, preparing for a post-halving environment where mining rewards are cut in half, making operational efficiency the single most important factor for survival and profitability. They were positioning themselves as a lean, efficient operator capable of thriving when mining difficulty is high and rewards are lower. This standalone strategy is what the current management team is fighting for. Looking forward, the path for Bitfarms is split into two very distinct potential scenarios: a fork in the road created by Riot's hostile bid. The expectation of a simple ride along with Bitcoin's price is a dangerous oversimplification. The reality is that your investment in Bitfarms is now a bet on a specific corporate outcome. In the first scenario, Riot Platforms succeeds. They either manage to acquire enough shares and win a shareholder vote to replace the board, or they present an offer so compelling that the current board has no choice but to accept it on behalf of its shareholders. In this case, Bitfarms shareholders would likely receive a premium over the current trading price, paid in either cash, Riot stock, or a combination of both. The uncertainty here is the final price and the timing. Corporate battles can drag on for months, creating a long period of volatility. The second scenario is that Bitfarms successfully fends off the takeover. Their poison pill holds, shareholders back the current board, and Riot eventually gives up and sells its position. If this happens, the acquisition premium currently baked into the stock price could vanish overnight, potentially leading to a sharp drop. From that point on, the stock's value would be entirely dependent on management's ability to execute its standalone growth plan. Can they truly compete with giants like Riot and Marathon Digital in the long run? Can they expand their hash rate and maintain low energy costs as promised? Their success would depend on operational excellence and, of course, a favorable Bitcoin price. There are immense risks here, including a prolonged crypto bear market, rising global energy prices, or execution missteps in their expansion projects. With the dynamics of this hostile bid in play, it's a critical time for investors. Comment below whether you think Bitfarms will be acquired by Riot or if they'll successfully fend off the takeover. Your perspective adds to the community's understanding of the sentiment surrounding this stock. In conclusion, while the initial glance at Bitfarms stock suggests a simple correlation with the crypto market, the underlying reality is a far more intricate and compelling story. The expectation of it being a passive investment that rises and falls with Bitcoin is a narrative that completely misses the active corporate war being waged for its control. The real forces moving the stock price today are boardroom strategies, shareholder activism, and the tactical maneuvers of a determined acquirer. The minor price adjustment we see is just a momentary pause in a much larger and more consequential drama. Understanding this conflict, the tension between Bitfarms' vision for its own future and Riot's vision of a consolidated mining empire, is absolutely essential. It's the difference between being